Good evening, everybody. It's Chris from ABC Advisory. Today we're going to start our FIT, and I think Alan's going to talk about the gaming sector to start off, and I've got some comments towards the end on the market and some other stocks that we've been looking at, but it should be a pretty short session this time. Go ahead, Alan.
So yeah, I was just listening to a presentation, and these figures that are staggering, I have to say. So video game revenues are $150 billion annually, and this is pre-coronavirus. So they are greater than the movie film revenues at 42 billion and professional sports revenues at 52 billion. So they're bigger than those two combined by more than 50%. And that's just going to be, next year's figures are just going to be horrendous from the point of view of the revenues from movie, film, and professional sports revenues. Whereas video games, will be the same or even have grown. So the gap is going to be ridiculous. Just one other stat that I really liked was the best-selling game of the 2010s, Grand Theft Auto 5, $6 billion revenue for that game. That's just staggering. I just can't believe how big that game is. And the highest-grossing movie of 2010s, Avengers Endgame, $2.8 billion. So it's double the size of the biggest movie. And if you ask, people in the street, who are the film stars, who are, what do you know about the greatest films or best films that have come out? Everyone will know it. What about the best games, best-selling games? I'm sure not that many people, or at least many fewer people will know about that. I found this really interesting. It was about, thematic, this presentation was about thematic changes after coronavirus. And this was something that I picked up that was very interesting. If you guys have it.
Yeah. So a couple comments, Alan, I have is this is a whole new industry, really. And I think that was the point of this Global X presentation that I think you were watching, right, Alan? They were just trying to show you some of these budding new industries that are developing and how much potential revenue is really out there. That leads me to a couple other comments I wanted to bring up. Have you heard of this? Have you guys heard of this new acronym, this TAM, T-A-M? So in some of the presentations that I've been listening to and talking with traders, everything now is priced according to TAM. So it used to be PE, right, as a valuation, or price of sales as a valuation. And now it's price over TAM. And that's price over total acquirable or total accessible or total available market. So if you have a market where the market's huge and you don't own much of it, the company still can be priced huge because the total market is so giant. And so I heard a presentation last week, and I can't remember if it was Global X or if it was another. I think it was by Harbor Capital with they were talking about small caps and how you can now price. And they were openly saying this company only has 2% share of this market, but the total market is $150 billion. So therefore, and they're the only player in the market, so therefore you can price them at about $300 billion because the market will grow at 35% a year for the next 5 years, and you get these astronomical numbers. And these companies are like making, I don't know, maybe 100 million, 200 million in sales, and they're being valued at $300 billion or $200 billion. So when money managers start talking in those terms, you begin to feel that there's a level of exuberance in the market that we haven't seen in a very, very long time, because we're pricing not only on future growth of the company, but future growth of the market, which the company is then going to gain all the share of with no competition, no interest from other companies. And so this is what, maybe the issue, I don't know if you guys followed it, but I'm going to grab the screen real quick here, because there's a couple points I wanted to make about certain stocks. So this week we begin to see, especially Friday, we begin to see the topping of, this is a momentum of ETF. So it was all these kind of high flying stocks. So Apple broke below this kind of like long-term trend it has, and today is just barely coming back to where it closed yesterday. So Tesla came out. Did you guys see Tesla's numbers when it produced
104 million profit or something like that, right?
Yeah, so they made a profit, first of all, and it was a big profit.
Fourth consecutive quarter.
Yeah, and they're going to be probably included in the S&P 500 now. Right, so they're like, okay, people are going to have to buy this stock. So the stock initially jumped we can put on this a chart. This is quite illuminating to see. The stock went up after hours and increased, and then went down, and then here's the earnings announcement. So it shot up and then gave back all of those gains and basically hasn't gotten anywhere since then. And so we are watching a company that has beat expectations, and yet the market is saying, you know what? We bought the rumor that this was going to happen, and we're selling the news. And so this is the new kind of, and this was done on rather heavy volume yesterday. You can see down here, not really that well, but you can see here that this was institutional investors also were selling these stocks. And so you saw that happen. You saw, again, Apple and come off its rails here on high volume. And, you know, we're waiting for things like Amazon. So when these are the leading stocks, these are the FANGs. We talked about how much they're involved in all the indexes. I think, yeah, here's the graph of how much these 5 stocks make up of the S&P 500. You know, way more than any time in the last 30, 40 years. And so we are seeing when these stocks are failing, this is going to have repercussions for the indexes themselves. So there's no sell signals officially on the market yet. I mean, the put call ratios haven't started going crazy and riding higher. VIX hasn't gone up. But when you see this kind of thing, if there isn't an immediate, you know, bounce off of these lows, you know, we don't get some kind of bounce, then we can expect lower prices ahead later this summer. So that's kind of what I wanted to bring up.
Chris, can you go back to the momentum chart and actually explain a little bit? That was something that came up with in a conversation with one of my clients this week. And we're looking we're looking closely at it to buy it. But maybe you can just explain what it is.
Actually, this is a good topic because everybody's like, I mean, I heard this yesterday on some with analysts and stuff, and like, oh, we now to look to be back, you know, buy the dip again, and where we should be getting back into these things. So there is no reason right now to be, in my opinion, to be looking at, I mean, it's great to start a watch list, but you're way early to start a watch list on a one down day. This could come back down another, at least to this area, technically, where this, you know, somewhere in here. So another $5 down. And that would be, okay, let's see how it handles from here. So I wouldn't be a buyer of any of these. Personally, I did some research this morning and thought, okay, for some clients, you know, some ways to short the indexes, right? So like, or at least hedge them, right? If you have certain stocks, you know, this is the inverse of the Qs. So if you look at the Qs or the NASDAQ 100, you have this chart, and then you have PSQ, which is the one-time inverse of this. And so if you have no other way to hedge your bets, you know, you can't go short things. You can't play with options. You have to take some position and say, okay, if I'm going to hold these stocks, right, then you have to have some position to hedge it. Now, one way to hedge it would be this PSQ. There's another one.
It's triple Q, right?
There's triple Q. This is 2 times this QID, and there's SQQQ, which is the short version of the triple, you know, the triple leverage TQQ. You got to stay away from the triple and even double leverage stuff, because there's just no sense in taking something that doesn't react. It's fine if you get a really big pullback, but if you don't, you know, you're just trying to hedge your bets here, and these things have a tendency to lose money because of the way that they're geared every day to reset themselves. So you want to stay with the PSQ, but something like this might be a valuable kind of position to have, you know, 10-20% of your portfolio. Other things that we talked about hedging that is still, you know, is gold has been flying. The big one, Mike, you brought up a couple of weeks ago was silver. Look at that. I mean, that's an amazing chart. So, you know, 18 to 21 on a metal in 3 days. So that's huge. So that's kind of it. I recommend everybody, you know, stay attached to our Telegram channel. any other comments you wanted to bring up?
Just made me think, Chris, before we finish, do you have a chart on gas price, spot gas price or gas futures?
Well, there's a U.S. the gas fund, right? UNG, and I think gas futures. We talked about in Telegram and then in an internal chat about Gazprom and how that might be an interesting play. And yeah, a lot of that can be related to the fact that, as we mentioned last week, gas prices are really low here, kind of stabilizing, bouncing off this.
Yeah,
so,
I think it's somewhere to watch and something that our audience is going to be interested in, even if they don't know they're interested in it.
Right, and then we put some slides about Gazprom and talked about Gazprom here on our Telegram channel, and how we think this could actually increase dividends, well, substantially over the next 2 or 3 years, and how that usually those increases in dividends are what drive investor attention to that stock, because you're not going to see a lot of transformation in terms of the capital structure or the workforce to make it any more streamlined or whatever, but you're going to see changes to its dividend policy, and that could increase interest in the stock. So I think that's it then, yeah?
Yep, that's all good.
Okay. We'll talk next week then, yeah? Thanks. Have a good weekend, guys.
Thanks very much.
So we just got off the phone with the FIT, and I wanted to add a little bit to Alan's conversation that we had earlier about the GTA 5 game. The GTA 5 or Grand Theft Auto game is owned by a company called Take-Two Interactive. Through a website we use to do analytical research that's associated with NASDAQ, we can find any stock that is listed pretty much on any exchange around the world and get some technical analysis and technical data about this. So one of the things besides all of this that we use this for is to come up with ideas that are related to specific stocks, specific sectors, and those would be ETFs. So we look for ETFs that hold these stocks, right? And so you can look by the percentage weighting of Take-Two Interactive within this ETF. So Take-Two Interactive has a 4.83% weighting in Global X's ETF for video games and Esports called Hero. The ticker's Hero. There's another one that we like is this Nerd Esports and Digital ETF. And the reason we like this one more than we'd like Hero is because if you sort by fund score, which is a ranking of which ETFs are performing well and which are performing not so well, you see Nerd is ranked towards the top, just under the ProShares Ultra 2 times triple Qs, which is the NASDAQ index itself, just double leveraged, and we would stay away from the leveraged ETFs. So you're looking at Nerd, or as I said before, Hero. Let's look at Nerd real quick. You see here that the stock weighting is 3.94, and inside Nerd, this ETF is going to have other holdings, other stocks, not just Take-Two Interactives. And to see those other stocks, we look at all holdings. And why is this ETF performing so well? Well, because it holds a large position in Tencent Holding, which is the owner of the company, or partial owner of the company that owns Fortnite, one of the best games out right now. But it also holds ATVI, which we brought up on our Telegram channel, NetEase, which we're interested in as a good play out of China. Again, Take-Two Interactive, and some other gaming stocks. So this is how we find interesting companies and use those companies to determine which ETFs clients might like to get into if they don't want to be in a specific stock. We can also use the technical data here to provide information about when is a good time to buy and sell a specific stock or a specific ETF. So I just thought that would be interesting, and we can come up with ideas related to Take-Two Interactive or other stocks that we bring up in our Friday investment talks. All right, thank you.